Hello guys, welcome once again to Founder 360. This is Glory doing an exciting masterclass today. I remember I did this poll a week ago about saving and investing, and I realized a number of us don't differentiate between savings and investment, and that's why I decided to do this masterclass and give a little insight that can help everybody who's starting on this journey to make a wise decision on whether to save or invest. So this is a completely free masterclass, and I hope you will learn something from it. Savings or investing? So savings and investing have many different features, but they do share one common goal. They are both strategies that help you grow or accumulate your money. And in essence, that means that the intention is in most cases the same when it comes to savings or investment. And ideally, it is meant to accumulate and grow your money. They both involve putting away money for a future use, but savings involves opening an account at a bank, while investing involves opening an account with an independent brokerage firm. But you'll find nowadays, in most cases, there are banks that actually have a brokerage arm. So you don't necessarily need to go to a brokerage firm that is outside your bank. So who should be investing? And the person who does an investment is called an investor. An investor, or the person who is doing the investment, should have sufficient funds in a savings account to cover expenses and other unexpected costs before tying up their large chunk of money in a long-term investment. So this simply means it would not make a lot of sense if you're rushing into investment and you've not secured your savings. So you need to first set aside some fund, ideally an emergency fund, which should meet your expenses before you even think of investment, because investments tie up your money for a long period of time. Ideally, this means that if you're thinking of investing, ensure that your savings account or emergency fund is well secured and can cover 3 to 6 months of your expenses in the event of loss of income. So you see, if you're going to make investments and you don't have any savings, and as I've mentioned, investments tie up your funds for a long period of time. In the event you lose your income, how are you going to bridge that income gap if you don't have savings? So it's always wise to start by saving some funds, and once you've secured 3 to 6 months, that's a safe bet. You can now think of tying up your residue or your change money into a long-term investment. What are the differences between saving and investing? In regards to account type, for savings, you open a bank account, while for investment, you register with a brokerage firm. But as I have previously mentioned, nowadays some banks have a brokerage department, or what they call, I think, a custodial department that will help you with investing. In terms of returns, you will find that savings have relatively low returns, while investing have potentially high returns. But there are cases whereby you could get lower returns if you invest in a risky portfolio. In regards to risk, savings have virtually no risk because you just deposit your money in a savings account. There is no exposure to any risk. You just gain an annual interest. While for investment, the risk varies on the investment, though there's a possibility of losing some or all of your investment capital. In regards to the product type, savings go to savings account or money market account. I know most of us have heard about money market and we assume money market is an investment. No, money market is a way of saving. The only difference that money market has with the direct bank saving is that sometimes you'll find that money market, they will use that money, or rather if you've opened a money market account with your bank, it's going to use that money to invest in some a stock or portfolio, but your principal investment is always safe and you can always access it. But this is not ideal investment because it's not a long-term you can leave it for as long as you want, but if you want to access it, you just need to notify your money market account holder and they will have your funds ready for access. On the other hand, in terms of product type, investment features stocks, bonds, mutual funds, EFTs, NFTs, cryptocurrencies. All those are kinds of investments. In regards to period or time, savings are normally for a short period of time, ideally maybe a year or even half a year or even 3 months. And then for investment, they are long, they average 5 years or more. This is because you need to give your investment time to grow. In regards to difficulty, doing a savings is relatively easy. You just need to walk into a bank account and open an account. While for investment, they are considered complex and you might need consultancy services because it's not obvious that you can identify, or rather a layman can identify if an investment is worth going for. You need people who've been there. You need experienced professionals in the stock market, or in if you're investing in real estate market, to guide you through on deciding what portfolios to go for. In regards to protection against inflation, savings offer you very little protection against inflation because ideally, savings, the maximum I think you can get locally is about 9% per annum. And that means that the inflation rate, if it's above that interest gain, you will be losing your money as much as, you'll still get your money plus the interest, but comparing it to the inflation rate, you will have lost your purchasing power. While for investing, the protection against inflation could be potentially high. Depending with how much your investment grows, you may find that you invest in a particular stock and it grows by over 100%. And that means it's grown way above the inflation rate in the economy. That means in future you'll have a more purchasing power compared to somebody who did savings. In regards to costs, there are no costs involved in savings besides the money you're putting into your savings account. While in regards to cost when you're investing, it totally depends on how much you're investing, or by some products or some shares are more expensive than others, some stock are more expensive than others, and if that and that will significantly determine how much you spend actually on your investment. In regards to liquidity, Uh, Savings is quite high because you can easily access your funds whenever you need them, while in investment it's still the same. It's high because you ideally need to also inform your brokerage firm to sell your shares, and that happens almost immediately. However, you need to understand that in investment you may not get the exact same amount you put, depending on when you ask for your funds back. So I see there's a typo left there. Okay. So what are the pros and cons of saving? Pros are the advantages of savings. So savings account will tell you upfront how much interest you'll earn on your balance. So when you're making that decision to save your money, you will know, if I leave my money for 1 year, this is the much I expect at the end of the year. So you are able to make a very informed decision. Bank products are generally very liquid. This means you can access or get your funds as soon as you need it. However, if your money is in a fixed deposit account, you may incur some charges accessing it prematurely. If you try and withdraw your money from a fixed deposit account before the stipulated time, you will definitely be charged some fees, and that means you will lose a little bit of your savings. But generally, savings accounts are very liquid. There's minimum maintenance fee. This means that the only fees you may be charged, if any, could be the account maintenance fee. The savings are generally straightforward and easy to do. You just need to walk into a bank account and open a savings account and start saving. What are the cons of saving? This is what are the disadvantages of savings. The returns are relatively low. This means you could earn more by investing. However, you need to remember that it's not guaranteed that in investing you will earn more. You could lose money if the investment is a risky investment and it doesn't go as planned. And then, due to the low savings returns, you may lose purchasing power over time as inflation eats away your money. What this ideally means, imagine you're putting 1,000,000 shillings in your savings account and you will earn probably, let's say, 10% at the end of the 12 months, compared to an investor who puts 1,000,000 in shares and they multiply by, say, 10 times. So you see, if the economy does not grow as expected, the person who did the savings will not have earned significantly compared to the person who did an investment. Pros and cons of investing. What are the advantages of investing? Investment products such as stock can have much higher returns than savings accounts and fixed deposits. This goes without saying. We've seen the way the stock exchange market behaves. There's the initial public offer price, and then a few years later, you realize that the stock has grown significantly, and people make even 20 times their value of the investment. So in this case, investing uh, is ideally better than savings in terms of the expectation of returns. Investment products are generally liquid and can be easily converted into cash. This means you can sell your stock whenever you feel like selling and converting them into money. If you own a broad, diversified collection of stock, you can easily beat inflation over a long period of time and increase your purchasing power. So, what this simply means is that it's always advisable to you know to invest in a number of portfolios instead of putting all your money on one portfolio. It's always advisable to pick a variety of a portfolio so that they can act as a buffer for each other in case one doesn't go well. And in the event inflation hits, you may find one portfolio is protecting you or growing against the inflation while the others are not growing, and that can just act as your safety net. What are the disadvantages of investing? The cons of investing: returns are not guaranteed, and there's a good chance of losing money, at least in the short term, as the value of your asset fluctuates. I want to emphasize on the short term part. So investment is not meant for short term. If you're planning to invest for less than 5 years, you may not reap the full benefits of investing. Depending on when you sell and the economic situation, you may not get back what you initially invested. As I've explained the first point, if you rush into selling your investment way before getting the full maturity benefits, then you will not get what you need. You'll not get value for that investment, and sometimes you could even lose money. So it's always advisable you give it time to grow and study and decide when it's the best time to sell. So to get the full benefits from an investment, you will have to hold an investment for at least 5 years so that you can ride out any short-term downdrafts. Investment is complex, therefore you may need some expert help doing it unless you have the skills to do so on your own. So that goes without saying, it's a disadvantage. You cannot wake up one morning and just decide to walk into a brokerage firm and buy this particular stock. You need a lot of guidance if you're not familiar with this kind of investment, and expert advice, which also comes at a cost. Fees can be high in brokerage accounts, such as consultation fees and management fees of your money. So ideally, this means that you'll have to go deeper into your pockets to manage that investment for it to give you value. So now, the big question: which is better, saving or investing? I know this is a dilemma for everybody, even for myself. And the answer is neither is better in all circumstances. The right choice really depends on your financial position. So this simply means you need to assess your financial situation and your financial position. If you feel you have enough disposable funds that you just don't want to put in your savings account, and you can hold it somewhere for, let's say, 5 or more years, then you can think of investing. So it just trickles down to the financial position of an individual to make the decision on whether to save or to invest. When should you choose saving over investing? If you're wondering, I have some funds, do I save them or do I invest them? So this is what you need to know. If you need money in the next few years, this is if you need to access that money before 5 years, then consider a high yield savings account or money market fund, and that will likely be the best option for you because you can easily access that money and it will have gained some value, as compared to investing it and then accessing it too soon and probably not reaping the benefits of time. If you've not yet built up an emergency fund, you can't proceed to long-term investment. That is more of gambling with your money. If you have not set aside a savings account that covers you for at least 3 to 6 months, then you should be saving, not investing, because you've not secured your unforeseeable emergencies. And if you tie up this money into long-term investment, you could lose that money. If you're carrying a high interest debt, such as a credit card loan, it is best to pay up the debt while saving than investing. Can you imagine how, crazy it is, you're putting money aside for investment and it's something that has to take 5 or more years, yet you're in debt. It's not possible. So if you're in debt, consider saving whatever you have and paying your debts before going for investments. When you should not invest, this is when you should never think of investment. When that money is meant to pay for yours or your child's school fees in a few months, this money should go into your savings account. Do not gamble with yours or your children's education. If you have some surplus money and it's specifically meant for a particular purpose, for example, education, you cannot put that money into investment, because when that time comes you may not have that money and the investment might have lost value, so it means you'll have lost your money. So if you're holding money for a particular reason other than for investment, please put it into a savings account. When you want to partake a big project, a big financial project, for example, building a house, this kind of money should stay in a savings account for safety and easy accessibility when needed. This is the same as holding money for school fees, because you have money that you want to, let's say, build with, and you decide to put this money into an investment, then it means you've diverted the project money into something totally different, and accessing it before maturity might make you lose your entire investment. When should you choose investment over saving? This ideally means when should you go for investment instead of savings. If you do not need the money for at least 5 years and you're comfortable taking some risk, investing the funds will likely yield higher returns than savings. This ideally means you need to be comfortable with the risk that you're taking and you totally do not need that money for at least 5 years. And this only applies when you have secured your savings and probably you have an active income that keeps building up on your savings. Then whatever you have as surplus can always go to your investment. Uh, these are financial freedom nuggets. I hope you've gained some knowledge and skill, and I look forward to more interaction in regards to this topic. So if you've not subscribed to my YouTube channel, please subscribe to stay in the loop once this kind of videos come up. And until next time, take care.